Welcome to the Freedom Real Estate Podcast with your boy, Andrew Fried. And I am excited and ecstatic to welcome Yosef the Brosef. He is a multifamily entrepreneur, an attorney, an all-around business person that does multiple ventures. And I think he owns upwards of 1,500 doors. So it's going to be an exciting story. How you doing today, Yosef?
Hey Andrew, I'm doing well. I'm doing well. Thank you very much for inviting me here. I'm very excited.
So, Yosef, tell me, what what's your origin story? What got you into becoming an attorney, and how did you ultimately find multifamily and entrepreneurship?
Okay, so I'm an immigrant. I came here to the US. I was like a month shy of 18 years old. So as soon as I got here, it was new language, new culture, new people. So I had to constantly um, prove myself in this new country. And fast forward 2013, I became an attorney. So I started my career as an attorney. It was a litigation firm, and I
Mhm.
really loved it. It was fun. I had no complaint working later than 6 or 7 and weekends, pulling 70, 80 hours a week. It was fun in and of itself, meeting new people. It's like a challenging, right?
Mhm.
And around 2019 was when I started feeling something different. Like at the time, I didn't know what it was, but I started seeing myself as constantly trading my time for money, right? And it was a schedule that's from the court that is not really flexible, and you have to follow the schedule, and somebody has it's like somebody has control over me, not me controlling my own schedules and my life, right? And so I started questioning myself, is this something that I want to do for the rest of my life, right? Can I call this job and life as something that I'm moving with my own will? And the answer was no to that. And I had two daughters, and my two daughters are growing up, and they wanted to spend more time with me. And I want to go somewhere with them, but a lot of times because my busy work, I couldn't. And I think what I wanted at the time was the freedom of, I call it freedom of TPO, right? Time, place, and occurrence.
Mhm.
Like that was at the time what I wanted to get. So I started reading books and watching YouTube videos just to, I think, find the options, right? And that was when I stumbled upon the book Robert Kiyosaki's Reach It and Report It.
Mhm.
And that was that was like an aha moment for me. One line that I read from the book that hit me hard, which is nothing rocket science, but it's like if you think about it as an employee, you work at least like 2 to 4 months for free for the government because you're paying tax that much, right?
Mhm.
So that was really scary. Like, wow, that's really true. And it's kind of deep. So um, I realized as an employee, or also as a simple employee, self-employed businessman, you really cannot create a cash flow that will give you the freedom, right? So after reading through the book, I decided to transform myself from W-2 to business owner or investor,
Mhm.
right? That's the only way that we could create cash flow or passive income, leveraging other people or system or other people's money, and and achieve that freedom that I was pursuing and talking about. So I did try different things. I tried doing a little bit of stocks, a little mutual funds and REITs,
Mhm.
whatnot, but nothing really thrilled me at the time. And as I was doing more research, I found about this asset class multifamily through biggerpockets.com.
Mhm.
And and that really fascinated me, the way how people come together, uh, not as a an individual, but as a group, and taking down bigger properties that you would not be able to take down as an individual, and how to create the cash flow, how to manage the properties, and how to build your net worth. All these things were a very interesting concept, and That's what fascinated me, and that's how I got into multifamily real estate in a nutshell.
So Yosef, when you were an attorney, you found Rich Dad Poor Dad. You ended up finding the cash flow quadrant, understanding that you really had to stop trading time for money, and you had to become, a business owner, um, or an investor versus trading your time for money, right? So you thought multifamily was that answer. So how did you get into your first multifamily asset, and what did your first deal look like?
So, uh, 2019, I was doing more of self-education, right? I was reading books, I was watching YouTube videos, and just consuming the knowledges at the time. But the more I do, I felt like I was on a like analysis paralysis stage. I was not
Mhm.
really going anywhere. So that's when I decided to take it to the next step by joining this multifamily education platforms like
Okay.
masterminds, right? So I
Wh-
looked into different programs and I
Okay.
ended up joining two groups, Jake and
Hmm.
Gino and MIH Mastermind. Both are
Okay.
for multifamily at the time. That was, I joined that group in 2020, early 2020. It was
Okay.
right after pandemic shutdown happened.
Wow.
And I take it as this guy's blessing for me. And I'm really sorry for those who lost loved ones. But for me at the time, it was this guy's blessing because courts were closed, insurance companies, my firms were closed. So for at least a good year, I was solely able to focus on multifamily and networking through Zoom and learning about multifamily and doing actual deals. So that
Wait,
was the
wait. So
period.
how how did this work as an attorney? Because you get paid based off billable hours, and you weren't billing any hours, so you were just not getting paid during COVID.
No, no, my firm just continuously paid my salary at the time without, during the COVID period. So it was good. It was the firm took care of me.
Okay, so you more or less leverage that free time to more lean into entrepreneurship, and your first endeavor into that was this multifamily asset class, right?
Yes. So as soon as I joined the multifamily groups, what I did was start on top of learning the stuff, the lingos and how deal work, how to underwrite, how to
Mhm.
talk to the real estate brokers, etc. I
Yep.
started networking a lot through the Zoom calls. I reached out to a lot of people in the groups and I started counting. And
Mhm.
just in 2020 alone, I stopped counting it after 200, but I did 200 plus calls for the entire 2020. It was almost 3 to 5 calls a day. Sometimes, yes, I missed the days, but I was really pushing myself to get at least 5 calls to 10 calls a week. And
I think you and I ended up speaking at one point. Believe you reached out on Bigger Pockets. You and I
I,
got in a call, and I ended up networking with you during that marathon of a networking session you call a year. I don't know
yeah,
what do you call that?
I don't know. It could be marathon, but yeah, that's and that's how I met my first through that networking. My first partner, who became my boots on the ground in Kansas City.
Okay,
And through that, we were able to close my first deal in December 2020. It was a 44 unit apartment
and you
in
what did you
Lawrence,
did
Kansas.
Lawrence Candace? Okay, so first of all, how did you structure that? Did you syndicate it? Did you joint venture it? And then for that particular deal, give us some numbers.
Sure. That was a joint venture deal. We had 6 people.
Hmm.
4 of us became more of a main joint venture partners, and 2 just came in as a money partners. Right.
Okay.
So we structured deal with a split. It's like a hybrid. So we did 20, I believe 20 and 80 percent split. So we got the 20% upfront for sweat equity, and then the 80% was based on the money that we put as a 6 people, right?
Okay. Yep. Yep.
And the deal, I believe, I'm just going off the top of my head. Um, in the beginning, the purchase price was 1.85
Hmm.
at the time. And as we're doing the due diligence, we found the roof and the HVAC systems were really old. So we asked the seller to fix that before the closing. And he said, you know what, I'll just give you credit. What do you want? And at the time, my partner asked for, he didn't know. He's like, oh, maybe 100,000, and he just ended up giving us $100,000 credit. And
Wow.
later, after closing, we fixed them all. We spent about 70,000 or 75. So actually, we netted about $25,000 at the time.
Okay. There you go.
Yeah. So and then so what? Literally 1.75. We closed it, and at the time, the average rent was about $500, right?
Okay. Yeah.
But there was an exact mirror image property. I believe the developer cut it in half and then sold it to two different owners. But it was exact mirror image property, same settings.
Mhm.
They were actually getting, I believe at the time, $150 more in average than our properties. So
Sure.
we knew that there was an upside there. So we took it over, and then we inherited the prior property management company from the prior owner. They're nice people. So for the next year and a half, we didn't really much fix things, but because given the area, we didn't really need a premium sticker on the units, right? So we just did some lipstick jobs, and we started pushing the rent as is. And we tested a couple tenants when there was an renewal period. I think at the time when we took it over, more than 50% was month to month. They didn't have the lease.
Hmm.
So for those people, we start reaching out and telling them you got to be on a long-term lease. And then for those who are renewing, we told them, we got to raise $50, $100. We tested. But there was no major pushback because I believe they also knew uh, the market rent compared to other properties. So I think they didn't have that much pushback. So we started pushing one by one, and after a year and a half, we were able to raise, I believe, 150 or $200 average rent. And as you know, and as I learned at the time, this area is more like we thought at the time like 7 or 8 cap area. So if you do just by raising $150 average rent NOI, and if you divided that by even just doing a 7% cap, what do we give? So 150 times, that's a 44 unit, right?
Yep.
And
44. Yep.
then and times 12 months, it's 79,200 divided by 7% cap. It just added $1.1 million value onto the property. So what do we do? And now it's time for refi, right? So we applied for the refinance, and CBRE came in. We did refi over agency loan at the time. So we did the full. So we did 100% cash out at the time,
Hmm.
and then we had a little bit over about I think 100,000 or if not more than that. So we returned everyone's initial investment back, and then we got some bonus, and then we still kept it for cash flow thereafter. So we kept it for the next like a year or two, and then it started giving us problems. Just it's because it's an old building. I think the
Yep.
vintage was 1980, if not 70 or somewhere there, more than 50 years old. So it started giving us some issues. But the property in itself was great, and we ended up selling the property last year
Hmm.
with some profit. So after combining everything, just on top of returning, if you include the return of the original capital, it did 3x altogether, excluding the cash flow that we received throughout the holding period. So I believe I'm still because I still consider that deal to be the best deal out of all so far. Because I still hold many. That's one of that was the first full cycle property and
Yeah. I'm,
textbook property, I call it. I was able
yeah.
to we were able to apply it every concept: forced depreciation, 100% cash out refi, infinite
Totally.
return. Yep.
Yeah. No, that was definitely a solid property. I mean, but ultimately, I think it was probably one of your best properties because you held it the longest, right? Like real estate's so good because it gets better with age, like fine wine, right? Um, and the reason why you and I both love businesses is because we know how the the NOI game works. We know how the multiplier game works. We know how the cap rate game works, where, if you increase the quote unquote profit of that business, and if you know the associated multiple, in this particular case, the cap rate, that you could increase the value of that business in multiples, in exponential ways, right? In your particular case, you increase the value of that business upwards of over $1 million just by pulling the lever of knowing how to increase the revenue, not by even putting that much money into the property, but just understanding market dynamics.
Yes, absolutely. That's why I love multifamily.
Yeah. So, but I mean, ultimately, your expertise wasn't multifamily. Your expertise is legal, right? Is being an attorney, right? So, how did you leverage that knowledge into this new business? What sort of aspects did you take on versus your partners, and how did you kind of lean into your strengths?
Right. So when I was doing the education, right, for about a year,
Yep.
obviously you will get your hands on in many different areas, so that
Totally.
you could learn the basics, right? I did the spreadsheet, I did underwriting, I spoke to the brokers and trying to find the deals and market analysis and all that. But at the end of the day, as you said, my strength is having this legal background. So
Mhm.
naturally, I think I started volunteering for reviewing the documents, talking
Mhm.
to the lenders,
Mhm.
and then as I was doing more deals, I started seeing myself with my niche area as moving the so before acquisition, right? So acquisition side and management side. So for the acquisition side, I started doing more of being a communication channel in between all the attorneys as going through the acquisition stage. So
Mhm.
seller's attorney, buyer's attorney, if it's syndication attorney, and our title company. So all become like I'm becoming like an dashboard where I get all I spread it to my partners, and then I tell them by when, just give it to me, and I collect them and then send it to the attorneys to make the process easier, and then bringing to just making sure to bringing to the closing table before the deadline. So basically, that's how my practice works, and my job too as a litigator. You got to make sure the court dates are met. It's because it's like a drop dead ball type of deadline, and you assign things to your assistant and make sure things are being moved. So that's basically how I applied my skill set to real estate closing state acquisition stage.
So you more played the role of kind of just coordinating, shepherding the transaction seamlessly and smoothly to closing. But what happens after it closes? Do you handle any like insurance claims, or potentially do you handle like the eviction attorney, or do you handle on the legal side once the deal closes?
Mhm. And well, I didn't really play per se pure legal side, and I didn't want to, I
Mhm.
didn't want to, I wanted to actually, manage the legal side by managing the attorneys, as opposed to me doing actual the legal work, because, I've done it years already. So I wanted to learn the business side of the multifamily, but still, again, because I have a legal background, what I did was, um, I was managing the budgets, right? I was talking to the lenders, moving funds around, actually distributing based on the budgets, things like that. That's what I took care of, mainly talking to the lenders. And also, there was an occasion where, yeah, we had an incident at the premise. So I had to coordinate with an attorney in between our partners and the attorney to move the claim, and then in the end we ended up selling the claims. So things like that, I was able to take care for the team.
Yeah. Um, So you more or less acted very much kind of like a controller, just quality checking, ensure everything's kind of moving along in accordance with kind of the business plan, right?
Right, and then communicating with the boots on the ground partner
Yep.
and the property managers, making sure things are
Sure.
moving. Yeah.
Yep. So it sounds like you more enjoyed playing the asset manager role than kind of the legal framework.
Uh, yeah, I'll say so. Yeah, asset management was fun. Yeah.
Yeah, yeah. Same here. So, you found real estate. It sounds like you had a great, successful first deal. You got your 44 units. How did you end up scaling from 44 units to over 1,500 rental units? Was that with your own cash? Was that raising capital? Like, how did you make that
Mhm.
transition?
Yeah. Well, just to correct that, by now I think it's probably 1,100 or
Okay.
12, not 15. At one point it was, but we sold a couple properties.
Okay.
Um, but basically, I with the team that I met through Mastermind and my
Hmm.
mentors.
Okay.
Um,
Through what?
one of
MI?
my
You said
mentor, Chris
through
Jess,
M
yeah,
through
MIH Mastermind,
MIX. Okay. Thank you.
yeah, and Jake and Gino. So I met my mentor, Chris Jackson, who was my deal coach, underwriting coach, and he's a leader of Sharpline Equity Team. And then another mentor of mine, Marco Barbaro and Hadaro Kiwi, they're MIH Mastermind leaders. And with this team, I started learning how to raise capital and how to do investor relationships and all that. So in 2021 and 2022, 2 years, during that 2 years, it was kind of boom. Multifamily market was hot, still hot at the time.
Yep.
We had a crazy deal flow. We had 17 syndication closed within that 2 years,
Wow.
our team.
That's a lot.
So almost every month or two, it was just closing, closing, closing. Marco's crazy raising capital together. So within that 2 years, we did about 17 deal closings. But before that, I had another syndication, 68 unit with another team. Um, but again, I think market really helped as well. But at the
Hmm.
same time, these two wings, I'll say, as an acquisition play and then capital raising play together as a management play, the team was great.
Hmm.
And these are the ones who know what they're doing, and they know how to structure deals the right way, how to raise capital the right way, how to have that investor relationship the right way. So big only because of the team, then I was able to, become a GP in all those syndications, and also I myself uh, came in as an LP as well with my own money too.
Okay. Okay. So it seems like there's a common thread here where it's like, ultimately I'm sure you're a great investor alone, but when you pair up with expert level people who are fantastic in their own specific right, that's when you can really do amazing things, right? I'm sure you never thought going into this you would be an owner of upwards of 1,100 doors, right?
Oh yeah, absolutely. Without the team, it's all team play, and without the team, as in lone wolf, I don't know how much far you could go. It's not only well, I mean, yeah, I've also seen solo play accumulating a lot of doors, but I don't know. To me, it didn't seem to be fun, right? You're also having fun as a team because we're not
Totally.
just doing the deals.
Yep.
We gather every year, maybe at least 2 3 times.
Hmm.
Florida, we're going to Ohio,
Yep.
New York City, and New Jersey, Pennsylvania. We gather and we not only talk about multifamily, but also other types of business acquisitions on, your family and travel, and just for fun too, right?
So growing up, did you play any like sports?
I did a little bit of basketball, baseball, football, soccer, but I wasn't that like a big of a sports player
Yeah, but
or
you
fan.
when you get a win together as a team, like you feel that sense of camaraderie, you feel that sense of like it's so much better winning as a group than winning alone, right? To celebrate with
Oh,
others.
absolutely, absolutely. You're 100%.
Yeah. So it sounds like you found your tribe, and it sounds like it led to pretty amazing things. So let me ask you this. I know you leaned heavily into multifamily, and since I think 2023, 2024, when some of the cap rates condensed, seems like you may have transitioned out of different areas of entrepreneurship, kind of shed light on that to our audience and kind of some of the lessons you learned along that journey.
Sure. So around 23, as you said, the interest rate was hiking, and less deal was making less deal was penciling out when we did underwriting, right? So But luckily, by the end of 2022, our team did three more JV deals, 20 units, um, 20 units, 43 units, 40 units. So I had enough deal flow at the time.
Hmm.
So what I did was, as I saw the deals were not penciling out, that's around when I also started following some other types of um, people on internet, like Adam Coffey, JT Fox, and uh, what's their name? And Cody Sanchez, right? This like
Hmm.
business acquisition people.
Yep.
Um, and I looked into it, and I didn't think it was like rocket science, and it was actually similar to business multifamily acquisition. If you really compare to, you just find a business that's underperforming and buy it, you leverage SBA loan, and then you buy it and put the management, better team in place, and then raise the revenue, sort of. So it's similar to a multifamily acquisition as well, and asset management. Um, so I was following that and studying more, and ended up closing a little cafe bakery nearby my office with
Okay.
another partner in New York.
Nice.
So that's still up and running. I learned a lot, and in the end, it's not really the same. It's
No,
different
what?
from, it's not the same as I said. Like acquisition side may be similar to a multifamily, but actually the running a retail business is totally different. So that, and then also in early this year, I also invested in a little mom and pop golf course in Pennsylvania. It's
Oh,
called
cool.
Wembley Hills. It's 9-hole
Nice.
golf course, 100-acre land. About 30, 40 acres were being used as a golf course, and the 60 acres of woods by now. But I was more interested in the real estate, the potential real estate side of the deal. We haven't really gone to do that yet. But those are kind of a bit pivoting to business acquisition as well as the multifamily. Because I didn't really let go of multifamily. In 2024, I did two syndications. And 2025, I started looking into different markets and smaller multifamily, more JV deals than syndication, right? I did a 10-unit JV in San Antonio, Texas, with uh with a partner that I met through MIH Mastermind, and also did a 3-unit and 6-unit multifamily in Pennsylvania, student housing, with another amazing partner and mentor, Robert Musso, from MIH Mastermind as well. Um, so again, I was able to leverage this group heavily to get into the deals, and the business acquisition as well.
I
My business partner is also those I met through MIH Masterminds.
Wow. So, your net worth is your network. I think you and I both know that, right? And you've obviously shown that through, these two masterminds. They've resulted in you getting thousands of doors and finding very competent partners, right? But
Oh,
I think you're touching on something very interesting, which I really think this is ultimately, if you're trying to be a sophisticated investor in today's market and you're trying to get ahead of hedge funds, the sweet spot to play, in my opinion, is between like 5 and 20 doors, right? Because it's too small for these hedge funds, right? It's too management intensive to be able to, put on-site management in such a small asset, right? But at the same time, it's so easy to stabilize a 5 to 20 U property. You can stabilize that thing, in 4, 5, 6 months, because it's way easier to stabilize a smaller property than a bigger property, right? And you can utilize velocity of capital to burn your money out to buy more and more and more assets. I think based off some of your examples, it sounds like some of your most successful deals were some of the smaller deals, right?
oh yeah, yeah, absolutely, absolutely. That's also another reason why you need to move as a team, unless you want to get a job again, right?
Yep.
It's those small units, as you said, heavily labor intensive. Without team, you have to be there. You got to be the one who's going to pick up the call. Sometimes you got to be the one who's going to be heavily involved with management.
Totally.
Then I don't know, somebody might like it, but and from my perspective and the way I see now things after a few years, I think that's not the play that I want to play, right? I wanted to leverage my team, those people who are really into operating, those
Hmm.
people who are really into underwriting. I
Yep.
could underwrite, I could manage if I spend more time, but people, they're good at certain things, and you're in a team with those people who complement each other, right? And that's what what you should leverage as a team, right?
Yeah, and you and I both know with more units and with more scale comes more responsibility, right? And when you're managing 500, 1,000 doors, you're managing other people's money. You have to operate at such a high level, at such a high level of infrastructure to be able to support their expectations. Versus if you're just JVing on a 5 to 10 to 20 unit property with your own money with somebody else, it's there's a lot less oversight, or what's the word, there's a lot less obligation to do the investor right because it's your own money, right? And ultimately, I would rather lose my own money than lose somebody else's money,
Hmm.
right? So
Yeah,
I've experienced that myself personally.
right, right. And you know the more you do, things change. And at one point in the beginning, I wanted to be heavily involved with the operation and asset
Hmm.
management. And as you go, I kind of see myself being more of kind of coordinator,
Yep.
and more of a relationship. And that's what I'm enjoying now, and seeing things more from um, more uh investment perspective, as opposed to just I'm doing the real estate, I'm doing
Mhm.
business negotiation, but as a realistic, as an investor, like how should I move my funds around in between these different sectors, in between these different vehicles, right? So you get to, I guess in my case, I got to learn how to see things more of as an investor perspective as opposed to just real estate investor.
Yeah, exactly. You diversified in many different areas, and golf courses and retail locations and multifamily assets. I think you have upwards of 23, so you're also in different markets, right? You're in student housing, you're in multifamily, so you're diversified in many different ways. So Joseph, let me ask you this. So ultimately, I'm sure like if you think back to your 5-year-old self and you look at yourself now and everything you achieved, you probably be pretty proud of yourself, right? So think back to that 5-year-old self. Like, what 3 pieces of advice would you give your younger self to ensure
Hmm.
success in this world today?
Always three things: ENA, right? Education, networking, and taking action. So I'll same thing. It's the advice I've been giving to my friends 5 years ago, 3 years ago, last year too, and still I will give the same advice. ENA. You got to educate yourself because you don't know what you don't know, right? And network. You got to be able to network with people who are ahead of you so that you
Mm-hmm.
can learn. And also you gotta be able to network with anybody because you don't know where the door is going to be opened up for you, right? And action. Well, if you just learn, if you just meet people, but not really pulling the trigger, not executing upon your plans, nothing's gonna happen, right? So those three things I always give out.
That's great advice. So adding on to that, I know you're big on, finding your why. So how did you find your why, and how do you pose other people find their why so they will take this action?
Okay. Well, I spend time as to why I do certain things, and it needs time to reflect yourself and the values. I think you got to do the exercise, like sitting down and really deep dive into knowing who you really are, right? Sometimes people don't really know what they're good at, what they like about, what they hate something about, what they love about. So you got to know, like what I did was I started writing down a lot of things, like when am I happy, right? And then when am I uh upset? Like what am I mad about and what situations? So going through a lot of these different sets of questions and really trying to go deep down into who really I am, right? That gives me, oh, what are the values that I could align with myself. So I think that kind of exercise will give you better answers as to what values you value the most, and then start from there. Uh, to find the whys. Like in my case, I value the time, especially time with my kids. So that's one of my whys. And another why is I really value um my purpose, right? As to like why am I here? Why I was born. So finding the purpose is another why. So individually, me getting better every day, 1% better every day, to and close to the purpose of my life, right? And secondly, um, being able to provide for my kids and spend time together. That's second why. And tertiary is being able to give um, like positive impact to other people as much as possible. So that's the three things that I'll use when I try to do something. Like, does it help me to become the better person? Okay, am I if I do this, does it help me to have better quality time with my kids, right? And three, if I do this, would that help me to have a positive impact upon at least a few friends of mine, right?
Yeah. Yeah. I mean, I think that very much goes back to Stephen Covey's Seven Habits of Highly Effective People, where he's like, think with the end in mind, right? Think back to, like you mentioned, like your 70-year-old self and think, what would the perfect life I want to be without living with regret and live that life today. Right. And I think that's
Yes.
kind of where you're getting at. So I 100% agree with that. So, you know, going back to kind of lessons along the way, could you give our audience a couple book recommendations on some great authors that really helped you kind of find your
Mhm.
why and find your vision?
Sure. I think always the first book I recommend is The Richer Than Poor Dad, if you had
Of
not
course,
read it yet. I mean,
great book.
right? And another book that I recently read was One Thing.
Oh yeah,
Uh,
great book. I love that
yeah,
book.
yeah. It's basically being able to, focus your everything and built upon the why, and then doing that thing so that it would help for you to do the next things easier, right?
Hmm.
So I really like the book. But overall, I'm not really a book person. I'm more of, you know what? Because I could listen to the books, right? Or maybe the summaries. So I don't really sit down and read the entire books a lot. And maybe only the few. Like another book that I really read, sitting down and read cover to cover was uh Think and Grow Rich, right?
Great book. Great book.
Right. Other than that, I read some here and there, but I didn't really finish.
Hmm.
I was more on, you know what? Let's take action upon it. So as soon as I have something in mind, I gotta take action upon it. And as opposed to sitting down and reading it. But I'm not trying to discount on the benefit of reading books. You know what I mean?
Yeah, it's all about skewing towards action, right? And reading books is important. Reading books is imperative, but there's other ways to gain that knowledge. And the way you gain that knowledge was you gained access to masterminds with people with knowledge, decades and decades of multifamily knowledge. And rather than you reading this in this books, you're gaining it through these
Hmm.
conversations, these networking events, these communities, right? So there's different ways you can utilize it, but ultimately it all comes down to, are you actually implementing this knowledge, right? you know and
Yes.
I'm sure people ask you all the time to be your mentor, to take you under their wing. And what I would say to that is, people ask you for advice, very people actually act on it, right? And the easiest way to get a mentor, in my opinion, is when you ask somebody for advice and they give you that advice, you do it, and then you follow up with that person to tell them you did it and what to do next, right? And so few people do that, and
Hmm.
it's such an impressive quality.
Yeah, yeah, I agree 100%. As you said, maybe five if I talk to if I talk to 5 to 10 people, maybe one or two will take up action upon and would tell me that he did this and that, and it would really impress me. But I think who will really impress me if they ask for help is the ones that actually know what they're good at and what they're asking for and what they're trying to achieve. A lot of times people they just don't know what they really want, and they would just blindly ask, like, what should I do? What can I do for you? Well, I don't know what you're good at. How can I tell you what I need? What kind of help I need from you, right? You're actually asking me to do more than just answering your question now, because I don't know about you. I gotta figure out like who you are and then come up with what you should do. So I think cutting that, uh, you better do your homework first. Like you know by listening to the question, like if that person had already researched certain things and the way they respond to my response, you know if they know something about this topic or not at all, right?
Yeah, yeah. I mean, to your point, ultimately, you need to know what your strengths are. Like, imagine you're a weapon, you're a samurai sword, and you walk up to somebody, you're like, "What should I do?" Like, I don't know. What are you? Are you a nunchuck? Are you a samurai sword? Are you a spear? I don't know. How should I use you? Tell me, right? It's like if we don't know
Mhm.
what your strengths are, it's hard to utilize that chess piece in the right manner, right?
Yeah, exactly, exactly.
So, so Yosef, this was a great conversation. We learned a ton about you. Uber successful entrepreneur. Where can people find out more about your amazing business endeavors?
I'm try to be very active on social media. My handle is Yosef Brosef,
Okay.
Yosef Brosef. Reach out to me. I'm open to getting on a Zoom call, just networking. Love to answer questions. I love to share my stories.
Cool. So you heard that here. You heard that here first, folks. If you're looking for a broseph, Yosef is your guy. Thank you for checking out the Freedom Real Estate Podcast. We'll see you next week. Take care and goodbye.